Hi, everyone. Welcome to the second episode of the Women Startup Leader Series. In this episode, we have Karen Contet as speaker and Nirjar Rahman, CEO of Bangladesh Angels, as moderator.
So for the benefit of those in the room who may not be as familiar with her, I will attempt to introduce her. So our speaker this morning or evening, wherever you are, is Karen Contet. She's passionate about helping startups succeed. She's the co-founder of WHub.io, Hong Kong's biggest startup community and power connector, and co-founder and CEO of AngelHub. AngelHub is the only Hong Kong's SFC regulated startup investment platform, highly vetting and investing in growth stage tech companies scaling and established in Asia. Karen is also the founding board member of the FinTech Association of Hong Kong. Immersed in the startup scene, she's a French foreign trade advisor, community leader for Techstars, Accelerator programs, mentor, international conference speaker around the world, and the FrenchTech ambassador and Women Who Code Hong Kong founder. So very much a very detailed and diverse set of experiences. We always like to kind of start with this, specifically your origins. Where did you grow up and what did you aspire to be when you were younger?
Okay, so first of all, I'm French, as you can guess by my accent, but I grew up actually in Japan, so very different. Actually, when I was a kid, I wanted to become a lawyer, so I didn't really take that road. I went to engineering school, half in France and half in Canada. And then I did a master in finance in France and started my career at JP Morgan in Japan in equity derivatives. I did this for a while before I moved to Hong Kong and switched to become an entrepreneur. So I never wanted to become an entrepreneur. It's never been a dream for me at all. And I really saw that, during my entire career, I will be working at a corporate because as a French person, that's how you're raised to go for. Honestly, we're very different from American people. We don't grow up with the entrepreneurial spirit and entrepreneurial dream, I would say. So what really drive me, I would say, to become an entrepreneur, it's because about 7 years ago, we had an idea, my co-founder and myself, Karina, who is also my best friend, and most importantly, who is still my best friend after all these years. So actually, that's quite important, right? We all know that. And we had an idea about building a platform in order to help entrepreneurs to grow by not showcasing their product and services, but actually by putting first their vision, their mission, and especially their passion, their why. So that's why it's called WHub. The W is really for start with why. So this was in like 2014, and the tech ecosystem in Hong Kong was only starting up. So we had about like 500 startups, one event like per week, 10 co-working spaces. So really, at the beginning of the tech ecosystem, and we really grew and fostered this tech ecosystem to become what it is today, like with over 4,000 tech companies here in Hong Kong, 8 unicorns. So it grew like really quite a lot. And it's really because both of us with Karina, we were just passionate about the idea of building these platforms that we decided to jump in. And, she quit also her corporate job and became a full-time founder. As an engineer, I decided that, I had actually some entrepreneurial skills, because when you're coming from like banking, you don't really know how you could fit into this entrepreneurial world, right? I was good at working at JP Morgan, but what can I actually do on my own? So as an engineer, I did some coding when I was at school. So I decided to go back for 3 months to do a full immersive course on tech, on coding. And I built the entire WHub website actually by myself. And that's how we started. So we grew, we became like the biggest startup community in Hong Kong. We organized events quite a lot. And yeah, exactly. And based actually on this strong foundation of like putting really the startup in the center, we expanded in Southeast Asia and in Asia. We organized a conference as well. The last one was in July with over 20,000 participants online. And based on this strong foundation, we decided that, okay, the community, the people, all these tech companies, why don't we invest into these tech companies? So that's why actually we decided to build AngelHub. And we decided to go the regulated way because we were the first one. So nobody knew really how to go and get a license. We go for it. It took us like 1.5 years in order to get the license. So it was a very long journey. Anyone who is used to deal with regulators know that it can be quite painful as well. But I think it's a key step to have when you want to take people money in order to invest into tech companies. It's good to be regulated as well, and that's how we launched AngelHub. So thanks to WHub, we really have a strong deal flow and connection to the tech community, and that's why we are able to have this amazing deal flow and companies that are coming to our platform. And the thing also with WHub is that we had a lot of investors coming to us and saying, hey, who is looking to raise funding? What do you think of this company, of these people as well? Because we know it's all about the people, right? So that's why we built AngelHub, and now we invested in over a year in 8 companies. So this is just amazing. We have our own fund as well. So what is really important is that we invest into the companies that we put on the platform. And I think it's key, right? It's something to come to someone and say, listen, I have this great tech company that is fundraising, and it's something different coming and say, I have this great tech company. By the way, we invest in them. Do you want to invest with us, at the same condition? And I think that's really something that is key. And what I think really differentiates us from other platforms is that we really have a strong due diligence and vetting, in place in order really to select the one that we believe have the strongest potential to succeed.
And thank you so much for kind of setting the scene. I'll just make one comment. I think that's something you and I have in common. So I spent from age 3 to age 9 in Kyoto. I don't know if we talked about this
no, we
in
didn't.
our conversation. It's because my father was doing his studies, and then we ended up moving to the US. And then, one thing that really struck me about, the way you were describing the natural progression from ecosystem development then to investing. I think, in many ways, that was also kind of the genesis of Bangladesh Angels. At least the board members, many of them were kind of ecosystem leaders who then saw that, hey, it's one thing to kind of have events bringing people together. It's one thing to have, incubators, accelerators, co-working spaces. It's a whole nother thing to make it easier and more structured to invest into startups. And so I think then it was a natural progression. Then they started thinking about an angel network. And so that really kind of resonates a lot. I want to just kind of set the scene, right? And so you mentioned, okay, so WHub came around in 2014. Quite remarkable that you built the website yourself. So, we're looking at this 3,700 startups number. In 2014, what was the number like? And just curious, like, what was the growth progression in terms of, I guess, the curve of, new companies coming up?
I think in 2014, there might have been like 10, when
Wow.
you start. And you need to find like tech companies. I think like in 2015, maybe we had about like 500, and then it continued really to grow. So yeah, it's quite unbelievable actually when you think about it.
It's exponential, like literally exponential.
Yeah.
Just like you want in a startup to do. And I'm also curious, so Hong Kong is obviously known as a hub of finance and I guess used to be more industry in the region. And I'm curious, tracing that journey over a 6 or 7 year period, some of the issues, in Bangladesh that we face is that, for example, we still have, first generation founders in the startup sector, right? We, oftentimes the investors are coming more from traditional industries. And so there's a bit of a lag there when it comes to, traditional industries like manufacturing or real estate or finance, as opposed to coming from the technology sector. Are those, and also, when it comes to regulations, not having the right kind of structures in place. We had a webinar last night talking about all that. Did you face those same issues as well in Hong Kong, or was it kind of easier because it's such a pro-business environment?
It is a pro-business environment, but it doesn't throw money at you in order to build stuff. So still, I think it's exactly what you described. People are more coming from manufacturing, from traditional finance, real estate, as well. So at the beginning, when someone was able to raise like $1 million, it was like, wow, that's like amazing. It was like already like a huge star. And now we have like 8 unicorns. So we can definitely see the progression. But it's true that there need to be a lot of learning, from both the entrepreneur side and also the investor side. And I think but that was actually one of the reasons that we decided to set up AngelHub. It's because, you need to protect the entrepreneurs. Usually, as you described, first-time founders. I think now in Hong Kong, we are reaching this inflection point where we see successful entrepreneurs reinvesting into like new entrepreneurs, which is something that is really key for the growth of an ecosystem. But still, there is a lot of, I'm not sure about education, but I would more say like awareness from both like investor side and entrepreneur side. You always need to find the right balance. You don't want to suffocate the entrepreneur, but still you want to have some right as an investor, but it's very hard. So we really want to be here in the middle in order to provide more transparency. And I think the word transparency is really key in terms of in investment, which is key also for an ecosystem in order to have it to grow.
And so as part of, WHub or AngelHub, can you walk us through some of that education piece, particularly of angel investors or potential investors? What sort of things have you had to do or are doing to kind of, get them to understand, how to be a good angel investor?
I think it's, there are like some really, I'll give you an example, but, I would never recommend an entrepreneur to get a personal loan themselves, on top of the company and to be a personal guarantee. I think you're already putting a lot of things at risk. You don't need to do these kind of things. You need to be able to read a term sheet. I mean, I saw terrible term sheet with like, you saw that the valuation was good, and usually people only look at the valuation. Oh, the valuation is good. Okay, let me go into it. But actually there was a share conversion of like 1 to 4 after 3 years. So the entrepreneur didn't really understood that they were going to get diluted. But, it's really one line out of like a 15 pages document. So, if you're not a lawyer, if you're not used to like these kind of things, and you just don't understand. And so you don't dare ask the question. So, my key advice is that when there is a clause you don't understand, you just ask for a concrete example. Like what happens if, I go to a lawyer valuation, or if I go to an upper valuation in the future, how this is going to affect actually the cap table and all these kind of things. And I think that's really, really key. And also, I think, seeing a lot of things from China, it's really about investor rights. As an investor, also, you are entitled to rights, but disclosure about the company and how they are doing. Of course, I mean, as an angel, you shouldn't call like the startup every week, to ask them questions and to be willing to direct the company instead of them. That's also, something that angel needs to learn. It's like, how much can I interfere actually? But you should be able to have a voice and to have information about the company. So there are a lot of, small things that might sound, when you're more used to it, quite obvious, but I've seen a lot of bad things, in term sheets that really actually disabled the entrepreneur to grow and the company to perform as they were supposed to perform.
I'm not going to name names, but my team is familiar because last week we were dealing with a few term sheets where the investor basically said, whatever money, wherever you're going to spend money, you have to first get it approved from me. And so that was one example of such terms, right?
Yeah.
No, totally makes sense. But I'm also curious, so going back to that point about 8 unicorns, maybe nowadays that's much easier to have that conversation, or it's almost like a no-brainer. You should invest in startups. Once again, back in 2014, 15, when $1 million was a big check, still is for us in Bangladesh. What was that discussion like with investors to say, why should I invest in startups? How am I going to get my exits?
No, it was very difficult, especially when you had such a bullish market in terms of real estate in Hong Kong, right? I mean, if you had money, you just invest into real estate. So you need to teach them about diversification. Europe and US were much more advanced than where we are. So, in order really to take examples. And also, I think it's when you're talking about angel investments, it's also how to be part of the future of your life, right? I mean, of course, you shouldn't invest 100% of your assets into tech companies. I would say this is like really bad. Okay, don't do that. Diversify, the money that you have. But it does make sense to invest about 10 to 15% into this kind of risky asset. And the thing is that when you're looking at everything that you use today, it's all tech. Look at your phones, look at all this delivery app, or like anything that you're doing in life, it's linked to tech. So I think you want to be part of something that is really bigger than yourself and that is really affecting people's life. And I think that's a good way to do it.
And you can't necessarily say that about an apartment building, can you? Right?
No.
Right, or maybe even a beachfront property. No, that totally makes sense. And then the last question before we really deep dive into AngelHub is, because that's also a question, it's how do you make ecosystem building pay? And I don't know if you were able to figure that out with WHub as far as how do you make that sustainable?
Yeah, no, definitely. That's a good question. I mean, we work with corporates. So you need to find actually the people that have the mean to pay and where you can add value. And that's definitely corporates, because they want to be kept informed about all these new technologies and how it could help them to develop as well. So we're organizing a lot of events with corporates. We also have our big tech conference. So that's definitely two ways to monetization. And then I think it's with all this knowledge about the community and about the tech ecosystem, it's really about investing into tech companies. I would say investing into people, and I think that's the best way to monetize and to make it a benefit for the ecosystem as well.
Got it. So I'll now move to kind of AngelHub, and by the way, if you have any questions, please put them in the chat box. I'll try to answer. So the first number that kind of stands out to me, right, is this one. 1,300 companies vetted.
Yeah.
And I'm really curious about, particularly, one, what is your vetting process like? And I'm sure it took a lot of, work over the years also with WHub to kind of figure that out. And second, how do you standardize vetting of the intangibles, right? Which is, and for us, 90% of the decision at the pre-seed stage is the founder. And so I'm curious about both aspects.
Yeah, so definitely we get a lot of deal flow and applications. Everything related to application is automatized. First, we have some kind of a short questionnaire to really understand about the company and their pitch deck. So that's really the first thing that we review. Then we'll go into a selection committee meeting, which is usually a 1 hour call or 2 hours call with the teams, the founders, in order to understand what they do better. So that's really, I would say, the first step of the assessment. And then after we go deeper, if we think it fits what we do, into a more like due diligence process, financials, all these kind of things. And then after we have what we call an IC investment committee, which is basically we have an investment committee of about 50 people that are external to AngelHub, which is a mix of serial entrepreneurs, successful investors and CEO of top companies. We select about 3 to 5 of them in order to assess the company with us. And I think it's key. So it's really about how to actually use your network in order to automatize the process as well. Because otherwise, if you want to be able to assess all these companies, you would need a knowledge that is like, KPMG or whatever. You don't want to become this kind of consultant firm, right? So it's the same thing as for WHub. It's how can you grow faster and how can you vet all this kind of company? And I think it's all about leveraging your network. When a company apply, usually we have common connections as well, whether it's, the Accelerator program they went through, one of their investors, one person of the team, at the end, it's always a small community, whatever you're talking about. So it's always about leveraging, the power of the network in order to be more efficient. But it's definitely a very long process, and our vetting process is very, very deep actually. So I have to admit, I have an amazing team that is, working really hard on doing this type of job. So it's, but yeah, it's quite a lot. I know.
As part of that process, do you also have experts who vet the tech stack as well, or?
Yeah, as well, exactly. But sometimes I have to admit that the tech is not really the key part of the business, right? Of course, we are talking about tech companies, but I mean, now you have so much like great tech that is already available and that about. It's more about, your your vision, your mission, your pain point, and the problem that you are actually solving, that is key. So, and also we don't really go into deep tech and like, investment that are really long term. So there is the tech is definitely a key part of it, but first of all, it's more like the vision, the mission, and the founding team.
Got it. And do you ever take companies at the pre-revenue stage, or is it always post-revenue?
Come on, we know that tech companies, they don't make revenue right away. So if you need to wait until they make revenue, you're going to miss out. I mean, that's for sure. So one key thing when you're investing into tech companies is that revenue cannot be a key aspect of it. Sometimes you have regulation that come into place before they can actually, sell their product. I mean, you need to sometimes build a bigger community before you can actually monetize. So revenue is key, but I would say more than revenue, it's attraction. What numbers are you monitoring, and is there a scalability and attraction and a really go-to-market strategy that is key? Because it's funny enough, because actually right now we are assessing a companies that is really, as we were saying, like a really tech company. They are solving a tech problem, for coders and for engineer, and they have a really awesome solution. But the thing is that, are you actually able to sell it, to explain it in a very simple way, and to target your key community? And I think that's more the key point, rather than, as I said before, the tech itself.
And so yeah, that's a really interesting kind of point, right? That the most logical, or seems to be on its surface, the most logical sort of traction point is revenue. But in the absence of that, what are other evidence of, I guess, potential product market fit?
Honestly, it's for example the growth of your customer acquisition, right? I mean, this is definitely something that is key. Or how much can you automatize the process as well? I mean, depending on the type of company that you are looking, or whether they are B2B or B2C as well, it's totally different, right? We know that B2B companies, they have a very long sales cycle, so they're not going to be able to generate a lot of revenue right away, and these kind of things really take time. So you need to be able to assess them in a different way. So it really depends on the products and the sector that they are in.
And do you also end up giving guidance on valuation, or is that kind of up to the company when they list themselves on the platform?
So of course we are not, first of all, we are not here to give a valuation on a company, especially an early stage company. I mean, it doesn't make sense, and it's not a role. Let's say that, we give guidance. I mean, sometimes it just doesn't make sense. I mean, you guys, you are like pre-revenue. I know I said it cannot be the only driver, but you cannot have a 30 million like valuation with like no patent, almost no customer, just because you guys are genius coming from big banks, just to give an example. So yeah, we of course we look at the valuation, and it needs to make sense. And the thing is that after seeing so many companies, usually where the trend is. Sometimes you pay, of course, a little bit higher or a little bit lower, but yeah. And sometimes, which happened already, it's really too low. First-time entrepreneurs, they are desperate to get the money. But still, if you go too low on evaluation, you will lose so much equity. It's not worth it. After your first round, if the funding team only have like 25% less of their equity, well, it's, you need to have a balance as well. So we, of course, we give guidance, and we try to.
And what's the typical kind of ticket size and the round size of the companies that you're kind of looking at?
So we are investing for like 80% of the deal flow that we have is kind of a pre-Series A, Series A. So I would say that in terms of valuation, it's somewhere between like 6 million up to like 25 million type of range. And the ticket size that we put is between like 300K for the smallest one up to like $1 million. So this is usually what we do. And for 20%, we have Series C type of deals that we, as I say, it's really the power of the network. where they see that we can really add value to the development of the company. So they give us some part of the tail of the investment. So that's why we managed to invest into WeLab, which is one of the 8 unicorn in Hong Kong, or into Pomelo Fashion, that is a big fast fashion like retail tech company as well, that raised like $50 million. So it's very interesting actually to have this mix of really early stage and later stage type of companies.
On the pre-series A, Series A rounds, are you typically the lead, or are you doing this in conjunction with, let's say, a venture capital firm?
So we are not the lead of the round. It could be with another VC or another angel that is putting a bigger ticket size. I mean, usually we are more like pre-VC, so it really depends. But it depends. But most of the time, we are not the lead. It really depends on the size of the round.
Got it. And I suppose like the lead has a huge say in, I guess, the way the round would be structured, including those other kind of parameters.
Yeah, but it depends on the side that they are trying to raise as well.
Mm-hmm. With regards to the investors, right? So you mentioned it's a regulated platform, and so do they get vetted as well? And what does it take to be an investor on AngelHub?
Yeah, so we are regulated by the SFC, the Securities and Future Commissions, here in Hong Kong, and we can only onboard professional investors. Professional investors actually mean that they are high net worth individual with a liquid asset of $1 million. Basically, what it means is that we know that it's risky. We know that it's illiquid. We know that it's a long-term investment. Of course, you cannot cash back your money in 1 week. So they basically want to make sure that they can afford to lose it, and that they can understand what they are investing in. So we are not a retail crowdfunding platform.
Right. And so how does one kind of get accredited as someone with that kind of liquidity? Is it just based off of your tax filings in Hong Kong, or?
So you don't need to be a Hong Kong based. So we onboard investors from all over the world. I have to admit that US citizens are much more difficult to onboard, as we all know. Always problem with US when it comes to money, that's for sure. But no, we only need like a bank statement or a certificate from their accountant. So it's actually quite a simple process to be done.
Got it. And with regards to, you mentioned the minimum ticket size of 10K. And so how do you bundle these investors? Do you create special purpose vehicles for investment?
Yes, exactly. That's exactly what we do. So we create one SPV per investment that we manage, which is, very great for the investor and for the tech company as well. Because for the tech company, they only have one name in the cap table, which is very important for them instead of having like 20, 30, 40 names. Especially that in most countries, when you have like above 50 investors or 100, you become actually a public listed company. So you have quite a lot of problems. And we manage the SPV up to exit. So we take care of everything. And then the good thing about having an online platform is everything is automatized. So in terms of reporting from the company, all the board minutes and all the information are already directly available on the platform for the investors. And we are basically in the middle between the investors and the company so that it can make it easier for the company and for the investors. And as we invest as well, we keep track of everything.
Got it. No, that's quite interesting. And so for the benefit of some of the people in the room, what are the basic terms of an SPV? Like, and how is it different from investing directly? Do I as part of an SPV investor, is a part of my investment going towards the management of it and including maybe AngelHub's carry, or?
Yeah, so we charge the investor 5% of the invested amount and 20% carry at exit, which means that it's a 20% on the profits, actually. So we win only if you win. Honestly, the 5% charge at the inception is mainly to cover the cost of like due diligence, KYC, AML, and the SPV during the time of the investment.
Got it. And this 5%, is that on top? So let's say if I commit to invest, $100 or $10,000, this 5% is on top of it, or is it taken from this
No,
my commitment?
it's on top of it.
Got it. Got it. So that's the extra kind of surcharge. Interesting.
Yeah.
And
So
when
yeah, and also because we want to be very transparent with the investor. I mean, so they know exactly how much they invest into the company, how much they pay in fee, why they do it. I always think it's like super important.
And going back to the point about kind of automating reporting, it's something I'm also dealing with as our portfolio grows bigger. And one of the challenges, maybe it's because of the immaturity of the market, is just constantly hounding a founder to say, look, need your monthly report, dude, or where's your P&L for the quarter, et cetera, that, these are things that you agree to as part of the term sheet, or even sometimes the shareholding agreement. But it's very hard to, get them to get into that cadence. And I'm curious, are there any recourse, I guess, in your context, if there isn't sufficient reporting done, or if a founder isn't sharing enough information?
So it's definitely part of the shareholder agreement, and I think it's very important to make straight from the beginning what you expect from them and at which frequency. And now, if they haven't done it before, because maybe it's part of the bigger round, we do have like few templates and all these kind of things in order to help them to structure it and to make sure that they report really the key data points. And I think reporting as an entrepreneur is key. And it's key also because we know that some of these companies won't work, right? And there are a few reasons why they might not work. But the thing is that if you keep the transparency with the investors, then it's also a feeling that you didn't lose your money because it was wrongly done. Sometimes it's just because the market is not ready and COVID happened, or whatever things could happen. But it's very key in order to keep the trust of the investor. So that they can reinvest, because maybe the funding team is actually awesome and they will start with a new project. So that's why also we want to emphasize to an entrepreneur is that actually the reporting is key, not only for the investor but for them as well, because it's a good way as a founder to assess your company and to step back from your day-to-day work. And sometimes it's very difficult to do so, right? So you can actually step back and see your key metrics as well. And also one thing that is key is that it's a good way for entrepreneurs to ask for help to their investors. And investors are actually happy to help. They invested into the company, they believe in you, they trust you, they want to be able to provide some help. So it's actually a good opportunity. And I think when the entrepreneur understood this, then it makes more sense for them to actually report.
So it's about kind of how you position that requirement as more of something that helps you as opposed to burdens you.
Yeah. If you see it just as a burden, it's never going to be done properly. And I'm an entrepreneur myself. I have my own investors, and I need to report as well, right?
That's also quite interesting. And so I mean, I'd love to learn more about that. But another question is, going back to the carry, how do you, post investment, how do you facilitate as AngelHub potential exits on behalf of your investors?
Yeah, no, that's also a very good question. So, for example, one of our lead investor is actually a PE firm based in Europe that is doing like 50 million to 150 million type of deals. So they invested in us actually in order to get the deal flow. So that's also a good avenue for exit. And the thing is that, it's so difficult to be in the early stage space. I mean, ticket size are small, your fees are actually small, you need to do a lot of deals, and the due diligence takes a lot of time. So it's actually not that difficult to find partners, in more like PE stage that are interested into your deal flow. So it's all about, as I said before, building this network of later stage investors that want to have info about this kind of companies in order to invest in them later on. Because the thing is that when you invest, you don't want to have a photo of the company. What is more interested in when you have all these different sort of data points with the history of the company. So even if they have update about the company, like, twice a year, how they are doing, what do they want to achieve, and actually how they react, that's how you facilitate the next rounds. And that's also why we are here. We are here really to help them for their next round. And that's why we also have our fund, because our fund, half of it is dedicated to follow up investment rounds. So it's very key, and we really want to be their partner in order to help them on this journey that is actually really hard.
Interesting. And that's also a really interesting point. So there's the platform where different investors come together, and it's discretionary, I think, right? And then there's the fund itself. And how does the fund work? Is there any overlap between the investor pool and let's say if you invest 300K, 400K, et cetera, how much comes from the fund versus how much comes from the investors?
No, so we have a fixed amount that is coming from the fund, and it just follows our criteria, and when it has been validated by our pool of investors as well.
Got it.
It's very simple, actually. The aim was not to add another type of burden for the fund, because it's actually a lot of work already.
And could someone who becomes part of AngelHub say, look, I trust you, Karen, and the team, why don't I just invest in the fund directly? Does that happen, or?
Yeah, exactly. And that's why we built the fund, actually, because the ticket size on the platform is actually pretty low. I mean, it's actually already high, but honestly, when you think about it, it's pretty low. So we had a lot of people that were interested to invest into all the companies, but for them investing like 50K or 100K just didn't make sense. So they were like, listen, let me just give you like 500K or 1 million, and then you can invest into everything. And that's why we built the fund. So it's always about, you have different people with different wealth having different appetites. And the thing is that there are already a lot of VC funds. So that's why we created AngelHub, in order to make everyone or more people actually able to invest into tech companies. And I would say that the thing about with AngelHub is that you can actually build your own portfolio as well. You don't have to invest into all of them. You select the one you like.
Excellent. I want to talk, before we go to the Q&A, maybe I'll kind of ask my questions on a couple of portfolio companies. So one you mentioned kind of already, Pomelo, which I think resonates a lot because obviously, Bangladesh is a huge, garments hub, as Hong Kong used to be, I think, one time. So it's omni-channel fast fashion.
Yep.
And I'm just curious what it means from the user experience side. Online, I think we're familiar. Offline, I think we're also quite familiar, but how do you kind of meld the two? And I'm curious, what you might have learned from that, from Pomelo.
I think really what we loved about the company is that, first of all, they had their own brand, which was very different for other type of fast fashion that were more an aggregator of different type of brands. So they are creating their own brands and taking care of everything from the manufacturing to the last mile of delivery. And then it was really the mix of this online, offline experience that they really managed to do in an efficient way. And the fact that their shop were really digitalized. You could buy everything from an iPad. And if they didn't have like what you were looking for, you can just order it directly through the shop and come and pick it up on the shop. And you had all these kind of tech advantages that they leverage very well. So it's really an interesting company.
You mentioned it's at Series, right? You mentioned you invested at Series C, right? If I remember.
Yes, it was their Series C, yeah.
Yeah, and so what's the exit for a company like this? Does it sell to a major fashion player? Does it go public? In what ways could something like this exit for you guys?
No, I think it's totally what you said, right? And honestly, now with the SPACs craziness, I think this kind of tech companies have actually more exit strategies than they used to, like even 2-3 years ago, and more chance of going public and with a fast exit for their investors.
Got it. Another one I found quite interesting and potentially applicable for Bangladesh, because education's big and we have a lot of young people, including babies, but it's Tiny Tapas. It's a marketplace for educational games and content. And I found it fascinating. So you can actually create games and kind of post it almost like a YouTube type model. And so do they provide the tools to do that?
Exactly. So I think, the thing about this company was also really the story. So the entrepreneurs that created it actually came up with it because he created some games for his dad that suffered from dementia. And in order to train his memory, he created a lot of games with their family photo. So the company started really by being able to create this kind of games for kids with problems. And that's really how it started. And then it got used by school teacher, and that's really how it grew. The tech is really awesome, but more than the tech, it's really the community of teachers that they manage together in order to grow. I would say, it's like YouTube, right? It's like it's all about the community, and it's been growing exponentially. They have created like a lot of different type of partnership. Soon you will have like Sesame Street type of characters available also to create your own games. So it's actually pretty cool. And a lot of schools are using it. They signed a big contract with a huge school in Brazil in order to distribute their product there to a lot of kids. So it's been growing also fast, and they have it in many languages as well. So quite interesting. Hebrew, English, Arabic, French. So it's quite impressive, and the growth has been for this company in terms of revenue. It's been scaling fast, and they really benefited, I would say, from COVID. It's also, I mean, COVID, we can say it's sad and everything, but then after, as an investor, you try to see how customers' behavior are changing. And definitely it was a huge opportunity for edutech company, and TinyTab is definitely one of them.
I'm curious, like, so for, I guess, a user-driven platform like this, and in the beginning, before people start kind of uploading, you mentioned there's, they were able to create this really great community of teachers, but before the community really gets undergoing and there's a tipping point, how do you induce that, right? Like, do you end up creating your own content, putting it there and as an example? What are ways in which you can kind of build that community from?
It's definitely the way to go. It's first is you use it yourself in order to create a lot of contents, and then after you grow from there. I think they were very good by being niche for kids with difficulties, and really targeted this type of community first, which they definitely see a usage for it, and teachers were quite happy in order to be able to develop it themselves, and then they grow from there.
And in terms of the customer side, right, how do you build retention loops when the user, which is the kid, is different from the purchaser, which is the parent?
Yeah, that's also a very very good question. I think it's really about, for the parents, I would say that they saw that it was not stupid games, and that there were a lot of educational content. And I think as parents, we see our kids spending a lot of time. I mean, I have 2 kids and one son that is spending hours on Fortnite. And it's true that I rather pay for an app where I can see that it's beneficial for him rather than this kind of games. Although he does play a lot.
True. And their business model is they get a cut of the transaction, I guess.
Yeah, exactly. So the thing also is that the creator of the game gets a percentage in terms of revenue from the usage of their game. So of course it's incentivized a lot of people to create, more games and more awesome games, to distribute to the community. And then of course they get a percentage of it.
Got it. I'll also go to, this is also a company that kind of stood out to me, BotSync. So as you can see, there's a, for, I guess, mobile bots for warehousing. Is the business model to sell the bots or to lease them to customers?
So at first, the model is really to sell the bots, and then there is a SaaS, on top of it in order to use it with a lot of updates, and it's modular as well. So you can change the robots functionality depending on what type of features you put on it, depending on your warehouse needs, which I think is very smart, because it can actually evolve over time.
And in terms of, are they focused on Southeast Asia as their primary market?
Yeah, they do.
Got it. And so what are the sectors that are the most ripe for this? Is it warehousing? Is it healthcare? Where's the biggest uptake at the moment?
So it's really warehousing for small and medium enterprise. Definitely, I have a lot of change in their warehouse type of design. And also,
and particularly in the...
Yeah, sorry.
Oh, go ahead.
No, and especially that they have a lot of change in terms of requirement of their warehouse that is changing a lot. So thanks to AI, they can really scan actually the floor plan in order to optimize the transportation from point A to point B.
Mm. And I suppose like in markets like Hong Kong or Singapore, where labor has gotten much more expensive than, let's say, a Thailand or something else, for SMEs especially, this might actually make sense as a way to kind of induce
Yeah.
labor costs or cost savings.
But
Interesting.
definitely it's for cost savings, but I think one angle also that they want to promote, because it can actually carry a very weight objects on them up to like 50 kilo, 100 kilos and more. It's really about the labor condition for like all the heavy charges that they need to carry on this warehouse. And I think that's really key as well.
Right. As the industrial standards increase. Got it. I've got a few burning questions, but I'll put those aside because I know the audience has been waiting very patiently. And so I'll open the floor now. Feel free to introduce yourself if you haven't already and ask away.
But I mean, if I may, I mean, there is another company that we didn't spoke about, which is the Sandbox, which is a blockchain and gaming company. And one that I also really love, because we invested in them about 1 year ago, before NFTs were like crazy as we know now. And when they were talking about NFTs and about giving back the power to the users so that they can actually own the creation into the game, everybody thought they were crazy, and we definitely saw this as a revolution. And now it's actually becoming true. And they've been performing like really well with the land values that they sell had actually a 10x over less than 1 year, which is really impressive. So you can really see the diversity of all the portfolio companies, and the fact that we're always trying to find, also the technologies that inspire us, right? I mean, and the passion of the entrepreneur.
You're talking about TSB, right?
Yeah.
Yeah, interesting.
Yeah.
And it was based in Malta, so it wasn't even in Southeast Asia.
No, I mean the team is actually a couple of French founders, interesting, but they have their lead investors that is based out of Hong Kong, their development teams that is based in Argentina, and as we say, tech has no frontier. So and gamers are from like all over the place, so it fits.
Yeah, and I think that's also the next frontier for Bangladesh, just given the population and then also the plethora of relatively affordable developers and good kind of designers. When vetting a company, how does one understand how the end product will work after reaching its target group or market? I guess this is more of a question for an earlier stage company that may or may not be still experimenting with kind of going to market. How do you kind of, I guess, have some visibility into whether or not it will get taken up by its target market?
Yeah, you don't, right? That's the beauty of it, is that you just don't. So that's why you need to always question your customers and be open to feedback, and also be open to bad feedback, because it's the only way to make you grow. So I think iteration is one thing that is key. You don't wait until it's perfect, just go for it, test it. And usually it's funny, because the features that works the most is the one that you haven't finished, or the one that you were not sure. And then that the only way you will get the ideas to develop actually what customer wants. Because most of the time when you launch your company, there are a lot of things that you don't know about your customer behavior, even if you're one of them, of course. And I think that's what is actually that exciting, is that, when you're a new company, you don't have all this technology legacies that really slow you down, like all these big corporates, right? So you can iterate really fast. And that's the advantage of a tech company, right? It's your speed to iteration. So leverage it and evolve with it.
Makes sense.
Yeah, and I think there is one point about angel investment, because you were asking the question about revenue, when you assess a tech company. But I have to admit that when you invest into early stage company, the thing that you need to assess is the team. it's their passion, their dedication for the problem that they are solving. Sometimes the revenue model comes later, you know, because they haven't found it, but you know that they are onto something, and also that they can pivot as well in order to find the right solution. So I think it's true that when you're talking about early stage investments, it comes a lot with the heart. And that's why, you know, we try to organize a lot of seminar with the founders, because when it's early stage, you invest a lot into people. And I think that's something that you need to remember when you're doing an early stage investment. When you're investing into a later stage investment, you know, you can do a lot of data crunches and, you know, analysis, Excel spreadsheets and everything. And also you have a lot of data points in order to make this. But for early stage, you know that, you know, shit's gonna happen. Sorry. And you know that, you know, things will change. But if you believe in the team, it's, for me, it's quite a good reason to invest, really.
And that's a big part of the consideration, right?
Yeah.
No, it makes a ton of sense. But maybe while we wait for the others, I'll ask a couple of burning questions, right? So one is, and maybe as part of the next steps. So one is, how might Bangladesh Angels members get access to your deal flow and be a part of your platform? How can they get started?
Yeah, so you can sign up directly on the platform. Everything is automatized in terms of the onboarding process for investors. Of course, feel free to connect with me on LinkedIn. You can find me easily. Send me a message, and I do usually check my LinkedIn and reply. So please, just feel free.
And that's how we met. So this is a testament to that. So thank you. And then, and also to your generosity. The next question would be, can we bring Startup Impact Summit to Bangladesh with you?
Honestly, it's online, unfortunately, I would say this year. So definitely welcome to participate, to showcase the startups, to showcase, you know, the ecosystem as well, so that people can learn more about it. Because I think it's, you know, it has a huge population, very young, actually quite, you know, in terms of tech adoptment as well. So it's gonna grow really, really fast. I think it's only like at the beginning, like Hong Kong was like 5 years ago, and it can only boom. And we saw like from China as well, so that when you're a little bit late in terms of tech adoptment, it's like for a tech company, right? You don't have too much legacy, so you leapfrog directly to the latest technology, and then the boom is huge. So that's how China is so well advanced in like FinTech compared to Europe or to the US.
Because of the lack of those legacy systems, and also, I guess, power structures in many ways on the regulatory side. One last, a couple last questions, but I don't know what the ratio is of, companies being listed on your platform and not being able to raise money, and when that does happen, what are some typical reasons why that is the case?
So there are different type of reasons. Sometimes they don't have an Asian angle that is strong enough, and we cannot bring value. Sometimes it's a little bit too early for us. Sometimes we haven't seen the traction yet. Sometimes it's just not a good fit. It's sometimes we don't believe in the model as well. Let's face it. So it could be a lot of different reasons, but one thing that we try to do every time is we always send a feedback to the startup. And I think that's key as an investor, and that's something that you owe them as well, right? Is that as an entrepreneur, when you're raising fund, you have like hundreds of meetings, like literally. And when an investor doesn't want to invest in you, please just say no. It's okay to say no. Actually, you're making them a service by answering. The maybe is kind of what kills a company. So we always try to give an answer really fast, and we always try to say why as well, in order to help them to grow.
Makes sense. I will end with this because it's also something we're grappling with. From your experience kind of building ecosystems, how do we create the space in the room for more female angel investors to get involved? Curious about what you've done or what you're learning works and doesn't work in that regard.
Yeah, I honestly, that's something that I'm thinking about a lot, especially because we have right now on the platform a company called Good on You that is doing sustainability and ethic rating for fast fashion companies. So, really trying to empower customer to invest into sustainable and ethical brands, and led actually by a female founder. And I have to admit that this company is really awesome, tech-wise, traction-wise as well, but it doesn't really resonate with male investor. You start talking about like fashion, and you can see that the attention span is off. It's kind of really weird, and that's why we need diversity for sure. I think the only way to do this is by how we raise our kids, because they are the next generation as well. But it's true that that's something that I haven't managed to solve. I think that myself, I was in an engineering school in Montreal with like 3% of women, and then after I was the only woman on the trading floor at JP Morgan, and then after I was in FinTech. So as a tech developer, so like the only one in a tech meeting, and that's why I launched like Women Who Code, because I was the only girl with like 50 guys. So yes, it's an issue, but I never really thought about it until, and maybe that's because my mother was is actually an engineer. So I always knew that it was possible. So I never really felt the question. So I think if we empower more girls and women to think that they actually have the capability to do it, they don't have to do it, but they actually can if they want to, that might be a good solution to the problem that we have today. But thank you also not for asking me a lot of like women questions as well, because as a woman, sometimes you want to talk about your company and what you're passionate about, and you don't really see the difference. So it's great as well.
No worries. We'll end it there, but I think the next steps are, would love to work with you on deal flow. Would love to potentially try to see if we can integrate Bangladesh as part of, I guess, the upcoming summit, and also to kind of learn from you, because we want to do a version of that ourselves as Bangladesh Angels in Bangladesh later this year. But really can't thank you enough for your time. You've been very generous with your insights, and we learned a lot today. And so I'm looking forward to more collaborations. But in the meantime, thank you again, and hope to see you in person soon.
Yeah, and thank you very much, because as an entrepreneur that is passionate about what I do, I love talking about it, so I could talk about it for hours. So thank you very much for giving me the opportunity to share my passion.
Anytime. But thank you so much for being with us, and thank you to everyone in the room as well for sticking around, and see you in the next webinar. But otherwise, have a good rest of your weekend. Talk to you soon.
Thank you. You too.
Cheers.
Bye, guys.
Bye.
Thank you.